Hello subscribers, today is Saturday, August 27, 2022, and I'm recording this a little bit later than normally. I apologize, I was really busy this weekend, but let's just get to it. We're gonna talk about high yield bonds, which have predicted this move for stocks several weeks ago. Stocks did collapse yesterday or on Friday following the remarks by Chairman Powell. And this is sort of a continuation of a downtrend that we've been having since basically beginning of this year. Oil is at critical support for the 4th week straight, especially on the weekly charts. I'll show you what I mean. And Bitcoin is approaching a critical low and could just collapse also. If you're a subscriber, then stay tuned. Look, we have so many new, or rather have quite a bit of stocks to cover, so stay tuned. If you're not a subscriber, consider signing up by going to MasterChartsTrading.com. Click on sign up. Sign up for one of the products. I have 2 products and 2 packages. I have the trading indicators, which I'll show you in a second, and the newsletter, which we cover various stocks that we trade. And of course the packages where you can get both of them together. Alright, let's get to it. So junk debt, JNK, high yield bonds. Looking at this chart, first of all, why do I care about the high yield bonds? So junk debt, JNK. We can look at junk debt on weekly charts. Weekly meaning that this says W, okay, it says weekly, 1 week, and down here we have what's called correlation coefficient. So correlation to S&P 500. Note that correlation of junk debt, high yield bonds to the S&P 500 is very positive. In other words, they are pretty much doing the same thing. They move pretty much the same direction together. So junk debt actually began its downtrend quite a bit earlier than S&P 500 in January of 2018 of this year. I'm sorry, January 18 of 2022 of this year, and this was a big canary in the coal mine for my thinking. I said that if something, if junk debt is continuing lower, collapsing lower, then then stocks most likely will be next, and lo and behold, they were indeed next. Now, looking at very recent price action, now we can see right there where I'm hovering on August 11th of this year, we had what's called a short signal. So how do I know it was a short signal? Notice on this chart we have 4 lines. So these lines are, the stuff that I sell basically. These are my indicators that I designed. They show you good price levels of where to buy, sell, or to do nothing. But mostly I like to use them for buying and selling. So if we're in a downtrend, as in this case junk debt, so downtrend, how do I define a downtrend? Downtrend for stocks and junk debt is when the security closes below this yellow support resistance line. Now, if you're trading Forex, like Euro versus US dollar, or gold, or Bitcoin, and then we use these 2 lines, the blue and the red line. But if we're trading stocks, we give a benefit of a doubt to the bulls, because there is a bullish bias to stocks. Stocks tend to go up. Junk debt I kind of lump together with stocks. So junk debt started its downtrend back here in January of this year, and this implied that stocks also will continue lower, and of course they did. Now junk debt hit a low right there on 13th of June and then started to bounce. Recently, in August of this year, the bounce carried it all the way to this red support resistance line, and it gave us a very clear signal. When the stock, or in this case junk debt, closes above the red support resistance line, or make even a high above the red support resistance line, and then closes below it, below this red line, that's a signal. That's a signal to sell short. Now, junk debt is not an ideal security to trade on the short side because options are not great, plus there's a huge amount of dividends. So it's not an ideal candidate to sell short. However, it gave a very good sign. And here on 11th of August, basically, you could have already started shorting the stocks. If we look on S&P 500, this is S&P 500, we can see that actually the price carried it significantly higher above the red support resistance line, almost to the blue line. We almost made it, but not, quite. So there was no bullish signal. There was no, once again, there was not a new bull market. A bear market for S&P 500 started later in April of this year, whereas junk debt started to collapse back in January. S&P 500 actually began, technically, in my opinion, began a downtrend right there on April 29th. Okay, so that was when the security closed below this yellow support resistance line. And then at that point, we're thinking, okay, we need to do the opposite. We need to sell short. We do not want to be buying the dips. We want to be selling the rallies. So we made a new low back here in May and then rallied. So we had two, short signals here. So something similar happened again into June, and we made a new low. So there's the new low on 16th of June. We kind of bottomed out here, and it was a really big rally. And many people thought that this is it. We're going to go back into the bull market, and we came super close. We literally came within a couple of percentage points right there on 16th of August. However, it never made it above this blue support resistance line, which is a line in the sand where we say, okay, we're now in a bull market. Quite the opposite actually happened. We kind of rolled over, and now we, on this Friday, August 26th, we closed below this red support resistance line. So for us, this is a short signal. This is a signal to sell short. Now, additionally, if you like to, if you like the various price patterns, then you could potentially say that this is maybe like a sort of weird looking head and shoulders kind of pattern. And we're literally, we're literally breaking below this level right now. Will it actually, I don't really look at those levels. I don't look really at patterns, so to speak. I'm more interested in actual price levels. So the price level that we were watching very carefully is this 4077, which was the red line, and we did close below it on Friday at 4059. So to us, this is a pretty straightforward signal to sell short. In fact, that's what we're doing. My subscribers are now selling short. So there is now a very, very good chance that this low from June of this year will not hold, and we will continue lower. So bear market is characterized by lower lows and lower highs. Now occasionally we make a higher high right there, but it wasn't enough to carry us into the bull market. So yes, we made a higher high, but I think with this close on Friday, I think we're gonna continue. We're gonna probably just like bounce around and continue lower, and then take out this low. When it's reasonable to think about somewhere in October. I would think that's when we're gonna continue towards those lows, possibly take them out. Looking at Dow Jones, pretty much the same thing. And notice bear market on Dow Jones also started in April. We had multiple short signals here. Huge rally, enormous rally. This is what's called the bear market rally. So those bear market rallies could be very large and quite violent, and it will take out many people's short positions. Notice what happened on 16th, 17th of August. Look how close we came to the bull market. we touched this blue support resistance line. You see, this line, it actually means something, and robots and people see those lines. You know, if you have them on your chart, and you can have them on your chart on TradingView.com, all you gotta do is sign up on my site, MasterCharts Trading. You will have the same lines. So we almost closed above it, but we unraveled and we closed actually below this red support resistance line. So in other words, another short signal for Dow Jones now. So I'm gonna put an arrow there. This was on Friday, so we again should be expecting new lows for the stock market, for Dow Jones. Nasdaq was significantly weaker than the S&P and Dow Jones, whereas whereas S&P 500 entered bear market in April, Nasdaq actually started the bear market back in March and gave a very nice short signal right there in 8th of April, and then now we have a couple more short signals. In fact, again, on Friday here we had a short signal. So same general principle, because of the correlations, high degree of correlation between different stock indexes, we will most likely take out this April or the June lows and continue lower. So remember, we are still in a bear market. Bear market is the opposite of bull market. So when bull market is, we're making higher highs, higher lows. So this is the bull market. We're making higher highs, higher lows, higher highs, higher lows. Eventually it breaks and we turn around and we become bearish. So this is the break back in March of this year, and now we're going to start most likely making lower lows and lower highs, lower lows and lower highs. So you need to kind of switch your thinking and avoid looking for bottoms, rather look for tops to sell them. Russell 2000 small caps index was even weaker than the general market. Notice that it entered the bear market in January of this year together with the junk that had several great opportunities to sell it short. Latest one again on Friday. So we are, it's the same general principle. We are selling it short. We're thinking about lower lows. We're thinking about taking out this low. Taking out meaning that we're gonna make a new low. Now if you go back to like year 2000 and year 2008, this is again what the bear markets are characterized by, lower lows, lower highs, but we do get huge, sometimes really big and very powerful, very scary bear market rallies. So we had this big bear market rally from June into August. However, the bullish levels were never reached. Bullish levels for Russell is above this blue support resistance line, and it never got there. So again, we rolled over and most likely will take out the lows now. Switching gears a little bit, we're looking right now at oil. So I'm gonna go to weekly charts on oil. It's just easier to see. And so again, the same thing I have on weekly charts. If you have, this is a weekly chart, so each candlestick is a 1 week's worth of activity. You can use my indicators on weekly charts. All you have to do is change the length to 52. On daily charts, use 250. So this is a daily chart, D, meaning that each candlestick is 1 day's worth of activity, and the length here is 250. The length here on weekly charts is 52. So on this weekly charts, it's just really kind of obvious. Notice that we were in an uptrend for oil and we were buying oil. So there is the opportunity to buy, for example, in December of last year, several opportunities here around April, but we never made a new high, and we kind of tapped out here at 125 or whatever, and then we're kind of making a lower lows. So the important thing is right now we're literally at this red support resistance line, which is at 87.96. Now, once again, as I said, for things like oil, commodities, cryptocurrencies, or forex, gold, we use just these two lines, blue and red. So above blue is bull, below red is bear. Downtrend below red, uptrend above blue line. And notice what's happening here. On all the last 4 weeks, we're touching this red support resistance line, but we haven't yet closed below it. So this is telling me that there is a support here, and we can, if we break the support, I think we will see a significant, almost a collapse. I'm almost sure that if we break it, we will take out at least $73 level, at least, but possibly more. Now, easily we could get to 60s, possibly even lower. I don't know when, but as in within few months to half a year or so, we can easily get to 73 if we take out this 87.96 or 88 level. Now, many people are telling me that if oil gets down to this low prices, that means we're going to be in recession or depression or whatever. I always had a problem with that, so let's look at correlations between oil and S&P 500. So looking at, this is oil and this is correlation to the S&P 500. Now, yes, there were periods in history, for example, from this 2008 to 2013, when indeed oil and S&P 500 were going up together. But then there were also periods in history when the oil was doing one thing and S&P 500 was doing something else. So to me, this correlation is actually quite bad. Sometimes oil is doing one thing and S&P 500 is doing the other thing, and sometimes they're doing something together. So I don't like to look at oil as an indicator of a potential recession or potential price movement for the S&P 500, because S&P 500 will reflect whether we're in recession or not. So yes, maybe oil will drop. Will it also cause a recession or a depression? I am less certain of that. So I think oil is more of an independent variable from S&P 500 and from recession, whatever you call it. So let's watch oil and see what happens. I think we can easily trade it, especially if it closes below $88. I would strongly consider selling it short, and at least $73 towards 73, but possibly lower. I mean, there's very little support here, honestly. It could really collapse. So that's what my outlook is for oil. And then let's finish up with Bitcoin. So Bitcoin is a live chart. This is traded 24/7. Bitcoin, I don't know, sometimes I get this flack from people who think I'm a, what do you call it, perma bear or whatever. We traded on an upside. We made good money on the upside for Bitcoin, but lately it's been in a downtrend. We had wonderful opportunities to sell it short. Notice a downward face and arrows. This technically is an open position from April of this year, because our stop is actually at the red line, and we never even touched it. So right now we're kind of inching towards this low from June, and I don't think it will hold. So we can look at Bitcoin on weekly time frame, and I don't know how low it will go if it breaks below this June low. I think $10,000 is a conservative downward estimate, but I think a 0 is actually a very good estimate, but maybe even a negative price, because there are futures for Bitcoin. Again, I don't know. Maybe it will just disappear and we'll say, okay, no more Bitcoin. But I'm very bearish, obviously, on Bitcoin and cryptos in general. So the reason being, again, I'm not don't hate it, I don't love it. I'm just looking at the chart, and the chart is telling me that it's bad. It's just horrible. It's collapsing, and it might just disappear completely. All right, that's it for this week's recap. Please head over to MasterChartsTrading.com, click on sign up one of the products. So again, I have those trading indicators. The trading indicators are these lines on the charts, which would greatly simplify your trading experience. You can pretty much trade anything under the sun. I trade stocks, commodities, gold, etc. Many of my subscribers are making very good money. I constantly get this, thank you notes from subscribers. And if you're not a subscriber, again, you can get also a newsletter. So a newsletter is where I send out various alerts about various securities that I think are doing one thing or the other. So notice we have quite a bit of stocks. We're going to cover Tesla, Cinemark, CrowdStrike, GameStop, VMware, etc. So if you're not a subscriber, consider signing up. A best deal, of course, is to get trading indicators and newsletters, $59.85 per month. It's a really good deal. And if you need personal one-on-one assistance, then consider signing up for VIP access. Again, if you have any questions, please let me know. Thank you for watching, and have another great trading week. Bye-bye.